the other thing I think that maybe founders don't always recognize, certainly I didn't even recognize this when I was in the venture industry initially as an associate. Eventually I became a partner and I started understanding more and more about how venture firms actually operate. But just how much venture activity is and continues to be driven by fund side decision making, when a fund is raising, what they want to do with their marks to market and things like that. And I think that is often puts companies in conflict with their investors. And I think investors often believe that sort of what's good for them is good for companies, and that's sometimes not the case. I just had a conversation with one of our partner funds. I'm not going to out them or the company, but he was describing a company vote that was coming up. He was asking my opinion for how to handle it. And some of the late stage he kind of gave me the whole lay of the land. And some of the late stage investors were clearly, like very clearly acting in their own interest as board members, right? I mean, as an investor, you can do whatever you want. You can act in your best interest, and you should expect your investors to ultimately act in their own best interest. But as board members, I didn't, and I gave this partner fund GP some questions to ask in the board meeting to try to sort of, make sure that people understood that he was watching. He's a board member in this case too, but he was paying attention to the fact that they were potentially making decisions that were really not in the best interest of shareholders and not as fiduciaries of the company. So that's just one example of it. But that to me, those are kind of some of you asked that, sort of what are the hidden secrets of venture.